Hi, this is Paul from globaltradingsoftware.com, and this is a video to help our prospective and also our users for the Guardian Zones. So the Guardian Zones are decision zones on multiple time frames that institutional traders make continuously, and we identify those zones. But the chart can look too cluttered. So this is copper on the 5 minute. The weekly time frame isn't really going to affect us when we're day trading on this time frame. All of this dark purple here is actually a big weekly zone. So if I just uncheck that, it starts to clear the chart up a bit. I've got a big grey zone down here as well, which is the daily. Not really going to affect the price right now, but I know when it gets to around about 4, I need to just put that on a minute and just to see if it's still relevant. So I can take the daily off. So we're starting to clear the chart a little bit. So let's just make this a little bigger now. So remember, the Guardian Zones are there to help you, to stop you from going into trades, from going short into support or long into resistance. But they're also there to identify those gaps of fresh air which are tradable, no matter what strategy you're trading. At the moment, I've just got the VWAP Predator on there for Ninja Trader as well, just so I can show you some buy and sell signals, when to take those trades and when not to take those trades. So this is the 5 minute time frame. The purple support and resistance zone is the 60 minute. I could take that off because I'm only on the 5 minute, just rely on that 5, 15 and 30. So the 30 is green, and again that's actually backing up a lot of those 15 minutes, which is cyan, and then the actual time frame that you're on at the moment, the 5 minute, are the ones in orange. So we just reinstitute those. I mean, again, when we look at the 60, it reinforces the framing of the chart, where this top here is really strong resistance, and this bottom down here that we see with the 15 that's sort of coinciding with that 60 is really strong support. So we know that is a strong area. Let's just take the 60 off and talk about trades. Okay, let's talk about the trades we take and the trades we don't. So we've come down through a 15, 30 and 5 minute support zone. We've come back up to test it. We get a sell signal, we go short. Okay, it's coming all the way down. We get other sell signals here. The risk to reward down to this support isn't fantastic. It's about 1 to 1. You could add at that point, but the momentum's coming down through there. So this is a decision that traders need to make now. Have you got enough fresh air to make that trade? Are you comfortable with that risk? If it's no, you don't take it. When you get a sell signal right by the support, you definitely don't take it. It comes back up, and guess what? It tests that same zone. Then we get a sell signal. You've got lots of fresh air underneath, goes short, comes down. It comes back up on a pullback, but you get a buy signal. You're not going to go long into that resistance. We then come back down, we get a sell signal here. Again, risk reward, if you're going reasonably aggressive with a stop, there's about 1 to 1. So it's down. That's the sort of area where you need to make that decision. Is that risk good enough for you? It comes back down to test that zone. We come back up again, then we get a buy signal. I am not going to go long into that resistance. And where we are right now today, live, this is the overnight session for the US. It's not really tradable on copper. We starting to get a little moves down with these sell signals, lots of fresh air coming down into support, and now we're in that support zone. So remember, it's about being sensible. If you're trading on a 5 minute time frame, you're definitely not going to have the weekly and the daily, and the 60s are probably just there to toggle on and off, just to confirm, where we are right now, for example, is very, very strong support. So getting buy signals coming out of there is very good opportunities. But if I change my time frame now to, say, a 10 minute time frame, I think I'd want to keep those 60 minutes on there. Again, they're identifying. One thing that does happen is all of the time zones come on. So that big dark purple there is for the weekly. Let's get rid of that. Let's get rid of the daily. And there we are on the 10 minute time frame. So that orange, which is left, is your 10-minute, okay? The 15-minute is there, and then the 30-minute is there, and then if you toggle on to get the 60, that's where we are right now. So again, when you're, for example, trading in those sort of extended hours sessions, a higher time frame is probably more pragmatic to trade. So this sell signal here, you know, risk to reward 1-to-1, it does finally come down, but you don't take these short signals into this support. It's there to guard you. That's why it's a guardian zones. We go back on this 10-minute time frame. Some of these sell signals coming down from here, really good. They're the ones to take. 1, 2, 3 different sell signals. This one is too big. We don't sell, we don't short into support. Again, we don't take those buys. Very, very simple. Now we could go up to, say, if we want to swing and we want to trade on the 30-minute time frame. Now we probably still don't want the weekly, but the daily would come in handy, the 60 and obviously the 30 now becomes the yellow color. So this is the sort of time frame that would be for swinging for longer term. So right now, out of hours, we've got a sell signal. We're probably not going to take that because it's a really strong support. But if it breaks this support here and that sell signal is still valid, that's when we would go short. That helps us make those decisions on those longer term time frames. So this is just the first in a series of videos. I've done this on futures. The next one will be probably on forex, then I'll do stocks, looking at different time frames, just so it's making it easy for you to understand, to use. So although we put those multiple time frames on there, you've got to be sensible in that when you're trading a 3 or a 5 minute, you really don't need that weekly time frame on there. You probably don't even need the daily, and the 60 is just there for confirming really strong supports, but you can toggle that off. Hopefully that helps. Rewatch it, make sure you understand. So no matter what signal strategy you're using, you've got to trade between fresh air. You don't short into support and you don't go long into resistance. Remember, these zones are automatic. These take into consideration what the decisions that institutional traders make on multiple time frames. So very, very important zones, and they're there to protect you. You just need to learn how to use them.